What's up, guys? Didn't do a video in 2 weeks. I was in Dubai with the family. Just wasn't possible. First of all, I was just disconnecting completely. I love nature. I love the beach. And we went to three different hotels. And more importantly, actually, couldn't do videos because the market opens at 5:30 local time, 17:30, and it closes at midnight. And to be honest, by 8 o'clock we were in bed because we just spent the whole day, every day outside, pool, beach, and with a kid. Anyway, logistically, whatever, it just wasn't possible. I was obviously following the markets because we were in some very nice hotels. We go there every year, by the way. Just Dubai is really like a second home almost. And the Wi-Fi went all the way up to the ocean, so was never fully disconnected, let's say. So I was following the markets, just not doing videos on it. I don't think anything too extraordinary happened until very recently. Friday, I think it was Friday, First Republic Bank really going under. Not something too surprising. I did say that banking crisis is not over. It's still not over. I know Jim Cramer said that with the end of First Republic, the banking crisis is behind us. I don't think so. I think that there's more to come. I know the markets were up, including the KRE on Friday, despite First Republic going under. I'm not sure if it's under or on Monday it'll be receivership or married with another bank, but I don't think it's over. I think it's just on to the next bank. The market will focus on to the next bank, and we could start to see some medium or senior banks. Some Schwab, Citi, Bank of America. I don't know. There are loads of banks you could choose from, or some unheard of bank that'll be next because Silicon and First Republic are not exactly well heard of. I hadn't heard of them anyway. But yeah, I don't think the banking crisis is over. I think the Russell is very, very fragile and sensitive to the banking, the KRE ETF in particular. I don't think that changed. So anyway, the markets were up. And and one final point. Not sure if you heard of it, but the pranksters, the Russian pranksters that phoned up Powell pretending that they were Zelensky, had Powell admit that there were two more rate increases that he intended to perform, probably two times 25 basis points before maybe then stopping. Now that that was exposed because it was a prank, the market expects it. And what the Fed always does is deliver what the market expects. So now I think they really have to deliver those two extra rate increases. And because there's a lag in the market, what it feels in terms of rate increases. We're probably experiencing rate increases from 6 to 9 months ago. So we've had quite a few since then. So imagine we've still got two more to go. These banks, whether it's now, and I think it is now, or with a delay of several months, they're still going to keep going under. That's my take. Anyway, let's look at the market. So S&P closed very strong. We had these tech earnings out, so that had a nice impact. News aside, it's true that the market was caught a little off guard by these tech earnings, but I think it's totally overblown. But I have to remind myself, before we look at the S&P, Nasdaq, Dow, just look at the DAX. You know what I mean? Just closed at all-time highs, not all time, but we're 2 weeks away from the all-time highs. So I need to remind myself, and maybe some of you guys need to be reminded, that inflation can be priced into the stock market. And if you remember the Zimbabwe, Argentina, Weimar, whatever hyperinflation or high inflation environment, the stock market always goes up to reflect the devaluation of the currency. So maybe it's worthwhile considering the value of your stock or your stocks that you're holding in terms of gold, to see the real true value. But it's just a reminder for myself mainly that stock markets can keep going up no matter how fundamentally pathetic an economy is because of inflation. So it can go higher, although I would never buy some S&P large cap. I am looking at some large caps like Alibaba, for example, one or two others. Amazon, I feel like adding to because I just feel like they're good buys long term, but I won't be buying them now. I prefer to buy on destruction. So big red candle days and flushes. So having said all that, the S&P looks like a strong close. We could go higher. I think immediate resistance right here. I think we are due for a small pullback at least. I think it deserves to be much lower, of course, but I'm not going to get into that again. I do see resistance immediately higher. The Nasdaq closed above its resistance. Next obvious resistance for me is this horizontal line. I don't know if it can get there. It's already made a decent move, but look, we closed at a high of day above resistance, so you'd expect a bit more of a move up, a bit like the S&P. So maybe the S&P will create the resistance for the Nasdaq. You know, once the S&P reaches its resistance, the Nasdaq will probably reach its, and it'll probably be around here, to be honest, 327. The Dow Jones, just like the S&P. So if you combine the S&P and the Dow Jones on their resistance together, they'll definitely form strong resistance because it's the same sort of percentage move away, and that will also create the resistance for Nasdaq even more. So I think these three, especially the SPY and the Dow Jones, the resistance they have just immediately above, that will be the resistance next week. The Russell, though, for me, it's always the Russell. It's still always the Russell. Look how weak it is compared to, I need to delete some of these lines actually, compared to the S&P, the Dow, and the Nasdaq. For me, you got immediate resistance, this descending line. I'm going to delete some actually. I'll delete the ascending. It's just easier for the eye. Yeah, so, you know, look, we're going to have some resistance immediately here, a bit like the S&P and the Dow, just a little bit of a move up and we get resistance. And then I expect a pullback. And again, the Russell, very weak. Look, if we go lower, let's see what happens with the KRE. I'll get to those in a second. But if we start to go lower and flush this level, we're immediately at the second last line of defense. And then we're testing the all-time bear market lows. And as this goes, I'm sorry, I don't care if Meta has good earnings. I'm sorry, but if you have a close below 162, whatever, it doesn't really matter. A close below this level, it's done. You know, the bear market is going to reignite on the downside. So I see a very weak bounce in the Russell, which isn't surprising. I see resistance not too far up for the Russell, the SPY, and the Dow. The Nasdaq will just have to fit in between those. And then let's see what happens. If we start to see some big red candles, one or two, then we're starting to look at the next level down in the Russell. And I'm really watching the Russell more than anything else. I always watch the S&P because the general barometer. But for me, it's the Russell and the KRE that remain the focus because, you know, we're in this sort of denial period, I would say, where the bear market has started. And now we've got this strong consolidation and people think, oh, maybe we can resume the move back up. No, back down again. You know, you've probably seen this famous chart. I should have brought it up actually, but I'm not going to ruin the video by trying to find it. But you know, this one where the market crashes and then it's the different sort of periods on the way up, this euphoric period, and then as it starts to crash, just before we start to crash, there's this little move back up where it's, oh, back to the normal. No, and back down again, and it's starting to look like that a bit. So I think the Russell is the perfect indication of why the bear market is not over, plus all the fundamental reasons. Let's look at the XLF. Strong senior banking stock. Yeah, okay, decent close, off the lows. Certainly look more like the Russell than we do the Nasdaq over here. So the XLF is not the strongest chart out there. You can see we're at resistance. Still haven't taken out the prior bounce move up. So, not too bullish, but still decent close at near high of day. KBE. Now this chart looks different to the XLF, and the KRE looks very similar too, just weaker. And I haven't touched any of these trend lines in 2 weeks, so I'm gonna have to redo some of them. Let's just keep it simple. Yeah, this is obviously relatively weak. Now I'm going for the thinner line now too to make it more precise. I think it's still visible on the eye. Yeah, very weak bounce, a bit like the Russell. I think when the Russell starts to roll over, and again, the S&P, the Dow, and the Russell all facing resistance quite soon. Look at this. It wasn't closing at high of day either, unlike the XLF, unlike all of the major ETFs. So the KBE, bit weaker even on the strong day. Bit of a move down. This takes 1 or 2 days and we're testing this area. A close below, we immediately test the all-time low. The all-time low, not like the Russell where it's the second last line in the sand. But this here is the second last line in the sand. The KRE, this this is interesting. This actually did what I thought it would have to do to be toast. It did immediately rally. I said a close below 41 just to be sure, which it did on this Thursday. But then look at this little rally, this little I don't know if you want to call it a head fake, but to the downside rally. This is still bearish though. Obviously, I mean, this looks incredibly bearish, but fundamentally it is for me. We have a little bit of a move up and then back down again. And once we have, this time I really mean it, once we have a close below this, then it's confirmed like, okay, this wasn't some fake out. Because you get that all the time. Stop losses, everyone's looking at this level. That's why I said 41, but they even got the 41ers. Stop loss, reversal. Now, if it closes above this descending, then you could say maybe the low is in, although I would even doubt that. And that would be a technical signal that the low is in, like we're going to reverse and then go back up. But fundamentally, for the lag effect and the rate increases that are still due to be felt by the market, I wouldn't even believe the technical breakout of this descending, even though it's my favorite chart pattern. I just think we're going to go back down. And then once we close really below 41 again, especially below the low here, let's call it 40.50, or close below 40.50, then let's see what happens. And that will probably be marked by, well, I was going to say First Republic Bank going down, but that's kind of, it went up despite First Republic going down. I don't know whether it believed Jim Cramer that this going down is a good thing. I don't think it is. I think the market will focus onto the next bank. And once we have another bank in crisis, I think that's probably what it will take for this to go back down again. It might coincide perfectly. And then the whole market will be shocked, like, wait a minute, we have a banking crisis. Then the Russell will go and all these guys will go. But I don't know. I don't want to predict too much, because it's just a fool's game. But I think that we are due for another move lower, led by the KRE, then the Russell, and then everything else following. So I'm bearish still the markets, especially the banking sector, especially the small regional banking sector. That's all I'll say for now. I'm not going to get into too much because honestly, I haven't looked at the charts on a big screen too much. It's all been on a small, tiny phone, and I was avoiding that on the beach, to be honest. I don't like to be the guy on the phone. I like to just be disconnected. So that's all I'll say for the major markets and the banks. Let's look at the interest rates. Let's look at interest rates. I forgot the order I do it in. The 1 year, always a bit special compared to the 2, 5, 10, and 30. Yeah, so ascending, it's still not bearish. Nice bounce, by the way, from this massive freak out low. So nice bounce. You can see resistance 5%. We've got this ascending line. I think these are correct. So let's see if we can crack and close above 5% for a move back up to the all-time highs of 5.3-ish. If we start to close below this, then we may start to visit back down, I don't know, low falls, 4.3 or something. The 1 year is a bit special. So I think this chart is all I need. Very obvious, the resistance, the supports. But once you go to the 2 year, it changes a bit, as you can see. So we've got the horizontal highs and high of the period. All of that looks okay. We had this breakout of this descending, which I left since holidays. So you can see that seemed to work. Look at this, it bounces off. And I looked at this just before doing the video. The 2, 5, 10, and 30 look kind of similar. They're a bit weak. We've had this little breakout of the descending. We touched the horizontal resistance. Perfect. Everything looks great. Again, the technicals work great. But now, okay, we're in the middle of the bounce. So do we go back up, or do we start to attack and go lower, especially a close below this wick here? Let's call it 3.86 something. Then we're going to start to test the low again, and then this would be totally invalid. We would delete this. It's still a little valid for now. But I think this is too much of a retracement. Normally when you break out of descending resistance, yeah, you come back and test this, but you'd expect more. I don't know. It's still valid. Let's just see how it plays out. Let's see how it plays out. But I'm definitely watching a move lower. And, if the banking sector goes down again, like I think is going to happen, and the markets go down, what we see normally are bonds being bid. I'll just look at the TLT very quickly, which is the opposite of the yield that I was just looking at. And then we would start to see a breakout here to the upside. So we see TLT start to attack this zone. A close above 110 would really do it. And then we'd start to see a move back up in bonds, which should suggest all of these yields go lower, and then it gets very interesting, but that should be marked by a major drop in the markets. But that's what we have to watch out for. If I look at TLT, this is kind of bullish. Nice bounce, the low is in. Okay, we have this channel, but we're making higher, not higher highs, but higher lows at least. And now it's really in this tight pennant. Let's see which way it goes, but I tend to favor a move up. This chart pattern suggests a move up to me, which should suggest a move down back in the yields from 2 to 30. So that's the 2-year. Let's look at the 5-year. Same thing. Look at this, even weaker, I would say. The bounce wasn't as strong, in my opinion. The 10-year, again, the bounce wasn't as strong. And look at this big red candle here. You know, 3% move down is notable for me, the yields. 30-year, look, you know, it's just not that much. It's still not done. You know, obviously I haven't put the horizontal line in all of them, but it's all the same thing. 10-year here. I'm going to do the charts a bit prettier after I finish this video, but you can see that it's just a bit weaker the further out we go in the yields, but basically it's in the middle of the channel. So let's see what happens. But for me, the 1-year is special, which makes sense because the rate expectation is within the next year. But, you know, once we go from 2 to 30, it just looks a bit weaker, which to me suggests a general bond breakout, which suggests also a market drop. Okay, I haven't actually looked at the European yields. Yeah, that's okay. It was a red day in general. That's not as bearish as the US. Let's see, British ones are still a bit more bullish, I would say, but let's see. Okay, that's yields. Let's look at the dollar. The dollar was probably the most important. For the 2 weeks that I was away, I was watching the dollar more than anything because this was a teaser. Were we breaking out? Were we not? What about Friday? Is that a breakout? I mean, yes, but look at the close. You could say it's, you know, I don't like to change my chart to adapt to the market, but it's not enough of a breakout above this descending for me to really think that it's a breakout. I mean, look, you know, we're trying to form a bottom here at 100, 101. Let's call it 101. I don't have to be too precise and say 108, but this 108 to 101 zone is definitely support. This is not just a coincidence that here it's holding. Can it break out? Yeah. How much will it move up if we do break out? I don't know, you know, because when you really zoom out, and if you just do a weekly chart and really zoom out, this is a zone, you know, like you can, and I've seen some other charts, and it's true, you can imagine the dollar just bouncing quite a lot. And I've seen some charts suggest all the way up to 120, and I can see why they think that. When you go to different time frames, I like the daily, and I think most people look at the daily. And you've got to know the fundamental picture, you know, de-dollarization around the world this year, the drop in the use of the dollar was 10 times the average year. You know, there's something happening fundamentally here, which is supposed to be reflected in the charts. If we flush below 108, if we close below 108, it's done. We're going to go back down to a new level, maybe 95 or something. Then we can forget all of this. But if we start to close, and you know what, maybe it's time to put in another line. Maybe it's this one that we need because it's too much of a tease. It's too close. It's for the descending to really count here. I would say a close above 102 point, let's just say 25 to be sure. Now we can say, okay, we're going to go up to the next level, which is probably still this level, which I drew a while ago. It's not that obvious, but we're going to go higher. You know, we need to see a close above 102.25. You know what I mean? Above these wicks. Then you can say, okay, we're going up a bit at least. For now, I wouldn't say it's a breakout of the descending. It's definitely trying, but it's just not obvious enough. So I would say 102 point, you know, whatever it is, 25, and then on the downside, 100.8. How about that? Either way, I'm not really going to change my strategy until one of these are breached, and I might not even do it once that's the case because I'm pretty happy with my miners. I'll get to that in a second, but for me, the dollar is a real tease. It's hard to call, basically, you know, but the levels are there. This line here I can delete. It's no longer relevant, but the rest are still valid. Yeah, I'm just going to wait and see. But what I will say is that gold has been weaker than I expected with the dollar down here. I'll get to gold in a second, but Anyway, that's what I think about the dollar. Let me know if you think otherwise. Since the dollar is so important, let's just look at the euro US dollar very quickly. Resistance up here makes sense because dollar's getting support. So if we go back down again, that will obviously be marked by a move back up with the dollar. But I'll get to the pound in a second. Dollar Japanese yen, very strong day. We have resistance coming up, whether it's here or there. Let's call it 137-ish zone, 137 to 138. We have resistance. So if we have resistance there, then that should be resistance on the dollar, so maybe the dollar can, if we start to move back down again, maybe the dollar does crack the 100.8. So this will be useful to look at, but the pound is breaking out against the dollar. That's a nice breakout. That's the close above all the recent ones. So the pound will move up. That will also be resistance on the dollar. So the pound and the yen could help a drop in the DXY. The euro, I think it's moved up a bit too much. So have to look at these three, but really what I spend all day looking at is just a DXY. Keep it simple. I've got already too many charts. I'm not going to start looking at 3 different charts just to try and triangulate the move in the DXY. It is what it is. So just look at the DXY. Okay, let's look at commodities. Copper. I haven't looked at copper in 2 weeks. So we had a bit of a false breakout here, which means this to me is no longer valid. I'll just use horizontal lines. But support definitely held. I mean, that line definitely worked. This one no longer valid. Keep it simple. Keep it very simple and easy on the eye. That'll do for now. I'm not in copper, so I mean, obviously some of the miners I'm in do also have some copper residue, but that's not why I invest. So just interesting to see. And that's with DXY at a low. So if DXY moves up and the markets could move down, I don't know, copper is losing its bullish sentiment for me anyway. I would have expected a stronger move up. But anyway, that failed. Let's see. I think the rest of the trend lines are valid. But yeah, if the markets go down, copper should go down. And if the dollar goes up, copper should go down. If the dollar goes down, copper should be able to hold this support. Okay, that'll do for copper. Natural gas, this one I was watching during the holiday. Just I mean, I'm bullish. I'm in fact, I may even be at my average at the peak on Friday, but whatever, I haven't done for this zone, so I don't really care what happens here. I still think it should move up, but this is a weak bounce. We've come back down. This is a bit like the DXY, come back down here, expect a breakout, but doesn't happen. Maybe that is what will happen to DXY, a small breakout, and then, but I don't know if we're going to roll over here in natural gas because fundamentally, no, technically, we've come down a lot. Maybe this is just a tease and there are some manipulative games going on out there. But for me, the natural gas should go back up. But anyway, I'm in for this zone. If we flush, I'll be very happy. I mean, I really don't mind. I've got 2 out of 5 buys in. If we come back down here, I'll probably be buying around 1.8. I've already mentioned this. So I'm just going to wait and see what happens. But I have to admit, this bounce is weird. It's rare to see something break out of this double bottom and then just sort of go sideways on the seabed. And then when it does finally break out, it just loses momentum and must be supply demand on natural gas. I don't know. But, that's why it's important to have a strategy, to know where your buys are, your sells. I haven't actually put any sells in. I should, but my sells will be much higher. They'll be sort of probably 3.9 gap fill. I'll probably have like 8 sells or something in total, just machine gun my way out. But yeah, I know where my buys are anyway, and I'm very happy holding. So I have no problem regardless of what happens. Oil, this is very interesting. Obviously, we had this, this ascending support, kind of nailed that one. That was good. Moved back up. Then we had the OPEC and non-OPEC supply cut that boosted this up enough to break out to suggest, hey, we're done with the lows. Then we come back down again. I'm not sure why we come back down again, but just technical, correction if you want, which is fine. For me, low 70s where we are now is a zone of support because we've retraced the whole OPEC, non-OPEC supply cut. So, fundamental news over here, boom, move up. okay. And I did think, look, if we come back down again, it's a good buy here. And I only have one oil stock. I didn't buy it, didn't add to it rather, but I was considering it. It doesn't completely move in correlation to oil though, because I think it was red on Friday or unchanged despite oil being up. But I was basically considering buying because I think oil's a buy here. I think this is the low, and I think now the low 70s. Yeah, okay, it could go back down to low 70s, but this is a buy. 60s are a buy. Any 60s are a buy. Low 70s is a buy. Even now is a buy for me. Oil depends on what you're buying, your strategy, whatever, how aggressive you are. But for me personally, oil's a bit of a buy. So I actually am considering adding to my PEI, Prosper Energy. I don't know if I want to do it on Monday, but yeah, this general zone here for me is bullish. I think we had a nice retracement. And look where we were. We popped our head above here. So a drop back down to this zone should be support. So I think we're going to go back up to the 80s, put it that way. Oil to the 80s again. Uranium. I didn't delete my things. Well, you can see it's kind of followed the trajectory of holding and then going back up. Okay, so this is really like this period here, just teasing, and still hasn't broken out of 20.4, let's say a close above 20.5, just to be sure, should move us up to the next. And now you can see how, because I was mentioning this in my other videos, close above here, you should go meet the next descending, because the other descending, which I got rid of, it's no longer valid, was this one here, which we did. I said if we break out, especially the horizontal, we'll go back up here. And that should coincide, if you start to move, this is why I end up drawing all over this one. You start to close above this, you should start to go up here, which should coincide with double technical levels, not just the horizontal, but the descending. So, but I am not in uranium. I want the flush, which is not happening. And to be honest, I don't deserve to be in uranium because I'm just too greedy, and plus I'm focused elsewhere. I think, not to quote Sun Tzu, but he who defends everywhere is weak everywhere. He who spreads his focus will not be elite anywhere. And uranium might be a sector too much for me, but not really, because if we come back down again and flush, I will wait. I prefer to have buys in certain stocks that I'm quite confident in, like CCJ of uranium. I don't want to get into the juniors. That would be too much for me. But yeah, I think if we do see a breakdown in uranium, then I could start to buy certain stocks, one or two seniors, and I think those would be good winners. So anyway, uranium for now has held the line and could actually end up being a bit more bullish here if we break out of this zone 20.4. Let's look at gold and silver. Yeah, gold and silver, very, very just sideways, just sideways action here. But again, with what's happening with the dollar was dropping and holding its 100, 101 level, 100.8/101 level. Gold is, I'm not sure. Gold is just sideways, and to make a move back up to the old highs, we probably need DXY to go back down. But what if we have the banking crisis that I'm predicting? Not sure. It could go either way. Just thinking here. Because if you have a banking crisis, gold should go up. The dollar can also go up with gold. We've seen that actually a few days where they were going up together even recently. So, but for me, the miners, like I'm in with the miners. I could be heavier, but I'm looking for a drop. I definitely think that there could be a drop in gold and silver. And obviously the miners. But when I zoom out, although I don't like to buy out this zone, I just see so much potential for gold to go up to new highs. And then it might be too late to start chasing. So, but look, just sticking to gold here, we're holding this zone just below 2000. I would say around 2000. But if we start to see a breakdown, if the dollar starts to move back up, which obviously it could, we should start to go back down again with gold, 1950s, for me, 1930, basically these lines here, tell the story. I could move this one lower because it seems to have been visiting the 1970s zone. But, you know, you can see the 1970s and 2010, these are sort of mini lines of support and resistance. Let's just let the chart do it, you know, let's see what happens. But there's a lot of geopolitics, the dollar, a lot of elements influencing gold and silver. But technically, you know, we've had a big move up, but still, we haven't really crashed yet. So that's something bullish, at least. You'd expect a big drop. Usually when gold makes a huge move up, it does correct, but corrects quite quickly. So the fact that we're holding this, it could be the move back up again. If we look at silver, silver is actually holding out quite well too. So silver is holding its zone over here. I think it's more inclined to make a move to test its highs than gold is. So I'm very, very reassured by silver's strength here. Obviously, if gold goes back down again with the dollar moving up, then silver could obviously go back down again, test this zone. But for me, silver looks good. So gold, if silver starts, maybe silver pushes gold up actually. But what we're looking for in gold is 2010, close above that. And silver, I would say 25.5, a close above those zones. And then you're going to test and maybe even make new highs in both. Okay, GDX, obviously this counts. This depends on gold and silver. I would say they've come back down again more than gold and silver, but that makes sense. That's typical. Too many lines here. I'm gonna have to redo some of this. And sorry for the distraction. My daughter's just screaming. Look, a move back up with gold 2010, and we're gonna have a big move up with the GDX and GDXJ. So the way I see it, these will start to move more, just like silver will move up more than gold. The GDX and GDXJ should move up more than silver. So bullish momentum there. I think that's all you need to say. I don't see GDX and GXJ necessarily following the market. They used to, now they sort of don't. Some days they do a bit, but it's really gold and silver. So what I just said on gold and silver applies to GDX and GXJ. On the way down, these support zones, these are very small mini support zones. I mean, this one, yes, very small. This one, yes. This one, not as obvious. But honestly, if we start to crash here, it's probably going to go touch descending support. So I'll take that one out, GDX. Yeah, just keep it simple. And nothing, yeah, not too many. I think I'll keep it like that, to be honest. So that's the support on the way up. On the way down, on the way up, the resistance, there's only one. It's the recent high. It's the recent high. The ascending can go. Yeah, there is one line I just added though. You see this one here? This was, I didn't actually have it previously, and I think it does count because, you know, 1, 2, 3, that's pretty credible. So if we do have a move up, let's just look at GDXJ, for example. We take out these two. I mean, it'd be happy days, but we may have resistance just on this upside. And who knows, if it takes a bit of time, it could coincide with this major descending line. So that's something worth taking note of. Anyway, I need to fix these charts a little bit, but that'll do for now before my daughter ruins the video. Sorry I've been away. I intend to do more videos, of course. I'm not going to cover Bitcoin here, but I'll cover some miners. I've been looking at miners a lot yesterday. I got back actually 2 days ago. But I looked at some miners and I have quite a few that are on my watch list. So if there is a move down, I'm definitely going to be buying these miners. In fact, I'll just show you which ones they are, because if I was watching someone's YouTube video, I would at least love to know which ones they are. They're these here. Brixton, come down a lot. I like it. It's moved up to new highs despite the bear market, and I think it's come down a lot. So Brixton Metals, I like that one. Cabral Gold, destroyed. I think it's pretty good. Silver Tiger, come down a lot. Not the best looking chart, very weak, but I think it's a good one. Investigator Resources, I've heard a lot of good news about it. Now, I don't like to buy this, but let's just say if it comes back down again, obviously with the miners, then that'll be definitely worth buying. I think that's, I think it's Australian, yeah. Bear Creek, I heard a lot about it. It hasn't exactly broken out compared to others, so this would be great, I think. Technically weak though, so you could buy it and end up not gaining for a while. And finally, a more well-known one, Go Gold. I think this one's also quite good and has come down a lot. So those are the ones I'm watching. There's also a few others. I mean, I actually had a big list of miners, junior miners, and I deleted them, but I keep seeing and hearing new ones, and I just add them to my list. I got so many juniors that I have to try and look at the ones that fundamentally are supposed to be good. I look at things like market cap, insider ownership, management, jurisdiction, the usual themes. But I also look at the technicals, which I don't want to start buying one that's already up 300% and is just flagging at high all-time highs, because I'm going to get 20% out of it, whereas I could get 50% out of one which is maybe just as good fundamentally, just technically being destroyed. So the small bounce would make better returns. Anyway, that'll do for the video. Sorry, I was distracted during the gold silver period because my daughter was screaming in the other room and I couldn't even hear myself. Okay, I hope that was of use.